Hello, everyone. Welcome to the Friday, April 11, 2025 edition of Market Opening Bell. US President Donald Trump has suspended reciprocal tariffs on certain countries or regions for 90 days, but raised tariffs on China to 125%. White House officials confirmed that the actual tariff rate on Chinese imports has reached 145%, factoring in a prior 20% tariff related to fentanyl. Hong Kong stocks rose on Thursday, tracking gains in global markets. The Hang Seng Index opened 545 points higher, peaking at 21,211, with a gain of 946 points in the morning session. The rally later moderated, dipping to a low of 20,530, with a 265-point gain, before closing up 417 points or 2.1% at 20,681. The H-share index rose 132 points or 1.8% to 7,668, while the Hang Seng Tech Index climbed 124 points or 2.7% to 4,813. Total market turnover for the day was 395.5 billion Hong Kong dollars. Southbound Stock Connect funds recorded a net outflow of 4.033 billion Hong Kong dollars, a sharp reversal from the previous day's record net inflow of 35.6 billion Hong Kong dollars. Technical analysis, the HSI hit a high of 20,211, briefly surpassing the 100-day moving average at 21,180, but failed to hold above it. The next key support level to watch is 20,450. If this level is breached, the index could test the 20,000 mark. Mainland Chinese markets opened sharply higher but saw gains taper off. The Shanghai Composite Index rose 36 points or 1.2% to close at 3,223, while the Shenzhen Component Index gained 214 points or 2.3% to 9,754. Combined turnover for the Shanghai and Shenzhen markets total 1.6094 trillion yuan, down 90.1 billion yuan from the previous day. The renminbi US dollar midpoint rate was set at 7.2092, the weakest since September 11, 2023, when it was 7.2148. After the midpoint rate release, the onshore yuan weakened to 7.3512, the lowest since 7.365 on December 24, 2007. The offshore yuan depreciated to 7.3717, the weakest since 7.4273 on April 9, 2025. On Wednesday, Premier Li Qiang chaired a symposium with economic experts and entrepreneurs, stating that new incremental policies will be introduced promptly based on evolving conditions to effectively counter uncertainties in the external environment. Reports indicate that senior Chinese leaders held a meeting on Thursday to discuss further economic stimulus measures, expected to focus on supporting housing, consumer spending, and technological innovation. Other government bodies, including financial regulators, are also set to convene to discuss economic promotion and market stabilization. Below is an analysis of two acquisition announcements. Prada announced the acquisition of Italian fashion brand Versace from US luxury group Capri Holdings for an enterprise value of approximately 1.25 billion euros, about 1.38 billion US dollars or 9.8 billion yuan. This marks the largest acquisition in Prada's 112-year history, creating a luxury group with annual revenue exceeding 6 billion euros, about 42.8 billion yuan. Capri Holdings, which also owns Michael Kors and Jimmy Choo, acquired Versace in 2018 for 2.15 billion US dollars, including debt. However, Versace has posted consecutive quarterly losses in recent years, with 2024 fiscal year revenue expected to fall to 810 million US dollars, struggling with brand positioning amid the quiet luxury trend. After a failed $8.5 billion merger with Coach's parent company Tapestry. In 2024, Capri shifted focus to divesting Versace and Jimmy Choo, prioritizing Michael Kors. For Prada, Versace's losses and integration challenges may weigh on short-term profitability. Anta Sports announced that acquisition of German outdoor apparel and equipment brand Jack Wolfskin for 219 million US dollars, about 2.06 billion yuan, with the deal expected to close by the end of Q2 or early Q3 2025. Founded in 1981 and headquartered in Istein, Germany, Jack Wolfskin offers clothing, footwear, and gear for hiking, skiing, and camping, with over 500 stores globally, though its performance in China has been relatively weak. Acquired by Colorway for 418 million euros in 2019, Jack Wolfskin failed to meet growth expectations, with 2024 revenue projected at 810 million US dollars in ongoing losses. Colorway 2025 shift to focus on golf prompted the sale of non-core assets. For Anta, this acquisition strengthens its outdoor segment, complementing Solomon's high-end positioning and extending its reach from premium to mass markets while leveraging Jack Wolfskin's material technology to enhance competitiveness. Short-term profitability may be pressured by integration costs, but if Jack Wolfskin turns profitable, its annual revenue could rise to 900 million to 1.5 billion US dollars in the long term. Additionally, amid the US-China tariff war, Jack Wolfskin's European base helps Anta diversify risk from complex Chinese exports. US stocks resumed their downward trend, with the Dow Jones Industrial Average narrowing its losses after plunging nearly 2,200 points during the session, closing at 39,593, down 1,014 points or 2.5%. The S&P 500 index fell as much as 6.3% intraday, its largest intraday drop since March 2020, before closing at 5,268, down 188 points or 3.5%. The Nasdaq Composite dropped 737 points or 4.3%, ending at 16,387. The Nasdaq Golden Dragon China Index, which tracks Chinese stocks listed in the US, fell 73 points or 1.1% by the close, ending at 6,405. The Magnificent Seven index declined 6.67% to 137.73. Tesla closed down 7.3%. Meta fell 6.7%. Nvidia dropped 5.9%. Amazon declined 5.2%. Apple shed 4.2%. Alphabet lost 3.7%. Microsoft dipped 2.3%. On economic data, the U.S. Consumer Price Index annual inflation rate for March fell to 2.4%, marking the second consecutive month of decline and the lowest level since September, down from 2.8% in February and below market expectations of 2.6%. Month-over-month, March CPI decreased by 0.1%, the first decline since May 2020, compared to a 0.2% increase in February and against market forecasts of a 0.1% rise. Core inflation, excluding food and energy, rose 2.8% year over year, the lowest since March 2021 and below the expected 3%. On a monthly basis, core CPI increased by 0.1%, underperforming market expectations of a 0.3% rise. The data suggests some relief in consumer price pressures before widespread tariffs were imposed, though this positive development may be short-lived following the implementation of broader tariffs. Additionally, initial jobless claims for the week ending April 5th rose to 223,000, up from 219,000 the prior week, aligning with market expectations and remaining at historically low levels. Today's stock pick is Decon Food and Agriculture, stock code 2419. Decon Food and Agriculture is a livestock and poultry breeding enterprise specializing in the breeding and raising of pigs and yellow feather broilers. Its business is primarily divided into three segments: pigs, poultry, and ancillary products. The pig segment includes market hogs, breeding pigs, market piglets, and Boer semen. The poultry segment comprises yellow feather broilers, chicks, and eggs. The ancillary segment includes flesh meat, feed ingredients, and other products. In addition to breeding and raising pigs and yellow feather broilers in its own facilities, the group collaborates with farmers for pig and poultry farming. The group's vertically integrated business model for pigs and yellow feather broilers covers the entire industry chain, from feed production, breeding, multiplication, farming to sales, giving it strong control over food quality and safety. For the fiscal year ending December 31st, 2024, the group achieved a revenue of 22.463 billion yuan, a 39% increase from 2023. Profit before fair value adjustments of biological assets reached 3.297 billion yuan in 2024, compared to a loss of 1.278 billion yuan in 2023 before such adjustments. Profit attributable to shareholder was 4.101 billion yuan, reversing a loss of 1.775 billion yuan in 2023. The overall gross margin improved significantly from 0.7% in 2023 to 21.7% in 2024, driven by rising pig prices and cost reduction measures that lowered the unit cost of pigs and poultry. The recommended buy price is 40 Hong Kong dollars with a target of $44 and a stop loss at $38. I do not personally hold the above stock.